Hi everyone, this is Mrs. B. Chen. Welcome to my Form 4 Foundational Accounting lesson number 2. Today is 7th September 2020. Today's lesson is about double entry system. Now we come to the very technical term for accounting. Okay, so to explain this double entry system to you, so we need to go back to accounting equation. Remember, what is accounting equation? Saying that we have assets is equal to capital plus liability. Is that right? Now, this is the left-hand side of the equation. Can we move liability to the left-hand side? Yes. Okay, if we move liability to the left-hand side of the equation, so that will be assets minus liability. Is that right? So you can see liability is positive on the right-hand side, but negative on the left-hand side. Okay, so the same situation. So can we move assets to the right-hand side? Yes, so that would be capital plus liability, and I put 0 here if I move assets to the right-hand side of the equation. So that would be, oh, sorry, this is minus. I need to change the sign, right? I need to change the sign for assets. That would be minus assets. See? So this is on the right-hand side of the equation. We have assets being negative. However, on the left-hand side of the equation, so assets become positive. Okay, so what about capital? We can do this capital and move to the left-hand side. And what do you think? So capital move to the left-hand side. That would be A minus capital. Okay, but however, for accounting, we use the language. We don't use the left-hand side and the right-hand side. We call this left-hand side of the equation as the debit side, D-E-B-I-T. So this is the debit side. Okay, so this is the accounting language. And then on the right-hand side of the equation, we don't call it right-hand side. We call that credit side. All right, and the symbol, sometimes we put this CR for credit side, and then DR for debit side. Okay, so here I have a table showing which side is positive to assets. So debit side means the left-hand side of the equation to asset, which is positive, right? However, if we move assets to the right-hand side here of the equation, which is the credit side, it becomes negative. So this is negative. All right, so how about capital? Capital is positive on the right-hand side, and right-hand side is the credit side. So this is positive. Okay, so therefore this is negative. All right, so what about liability? Liability is positive on the right-hand side of the equation, which is the credit side, and the opposite side, which is negative on the debit side. Okay, so here we have the accounting equation again, so which is A equals to C plus L, and C stands for capital, and the meaning is this, which are the resources supplied to a business by its owner. And in our example, Kelly is the owner. So after Kelly set up her business, Kelly must be very busy for doing her business, that is to go to the supplier, to buy goods, and then sell to the customer in order to earn money. All right, so that I need to introduce 2 more terms to you. So the first thing is revenue. All right, so what do you think about revenue to Kelly? It must be a good news, a good thing to Kelly. So therefore, revenue will increase capital. Okay, so what is capital? Capital is positive on the credit side. So therefore, we also have revenue, which is a credit item. So positive on the credit side. Now this is very, very important. So revenue, the new term, which is a credit item, because revenue is a good thing to Kelly, and which will increase capital. Okay, next. So what is opposite to revenue, which is expenses? Okay, let's say expenses, because Kelly needs to pay wages to her employees and electricity and paying rent and things like that. So that expenses being negative to the owner, a bad thing to the owner, which will decrease capital. And what is capital? Capital is positive on the credit side, but however, expenses will decrease capital, so expenses will be a kind of debit item. All right, so these are the two new things. Revenue, credits. On the credit side, positive. Right? Expenses is a debit item, and revenue is a kind of credit item. Okay, so therefore I go back to the previous table. So assets being positive on the debit side, so we call that asset is a kind of debit item, and capital is credit item, and liability is credit item. And what about revenue? Okay, revenue is a good thing to the owner, which will increase capital, so which is positive on the credit side, and this is negative. All right, how about expenses? Expenses is a debit item. All right, so this is negative. Okay, so this is a very basic and also very important concept about accounting. Okay, so there is another way for you to remember whether they are positive on which side or credit or negative on which side. So you just remember, let's say assets is positive on the debit side, then you will know the opposite, which is the credit side must be negative. So how about capital? Capital is positive on the credit side, so capital is a kind of credit item, and this is also credit for liability, and revenue is also credit, and expenses being debit item. Okay, so this is very, very important about the basic accounting. Okay, so here we have a diagram about movement of inventory, and which is same as goods. Now there are three parties, so we are in the middle. So this is BAFS Limited. So this is owned by Kelly, and then we are doing transaction. We are doing recording for the company. Okay, so here on the left hand side is supplier. So what is the action? We always go to buy things from supplier, right? So the movement of inventory to be flowed from supplier to the warehouse of the business. So we have a name for that. We call that purchases. Okay, and after buying things from supplier, okay, for the goods or the inventory here, we are going to sell to the customer in order to earn money. Is that right? So we have sales. All right, now this is very, very important. Okay, so what do you think about sales? Sales must be a good thing to the owner, which will increase capital. So for sales, it will be a credit item like revenue, right? How about expenses? So how about purchases? Purchases is opposite to sales, okay, which will decrease capital. So this is a debit item. All right, okay. And so sometimes what happened after sales? Here, after selling goods to the customer, what about if the customer, they are not satisfied about the products being purchased from us? Then we allow this returns inwards. All right, so since return inwards is opposite to sales, if sales is credit item, because good thing to the owner, increase capital. So what do you think about returns inwards? Return inwards must be opposite to that. So this is a debit item. All right, so this is very, very important. Okay, so this is purchases, means we buy from the supplier. So what about if we're not happy about the things purchased? We're not satisfied. So we can have this returns outwards goods to the supplier. Okay, so I have returns outwards to the supplier. So therefore, what do you think? Return outwards being opposite to purchases, purchases being a debit item, so that this one must be credit item. All right. Okay, so after debits and credits, now we come to the name of double entry system, which is also called a double entry bookkeeping. Now here is the meaning: a system by which transactions are entered how many times? 2 times. So once on the debit side and once on the credit side. And then now I'm going to show you how do we use double entry bookkeeping to record this. All right, okay. So now we look at sales. Let me tell you that there are two kinds of sales. One is cash sales. And cash sales means money received after sales. All right, and I'm going to show you double entry because we record two times, once on the debit side and once on the credit side. So this is the usual way. Very often we don't put debit credit in the same column. All right, so look at this. Sales is a good thing, right? Because sales will increase capital, and sales being a credit item, so that we credit sales, that means more sales. So after selling goods to the customer, cash sales means we have money received it, so therefore more cash, so I debit cash, and then we can receive check from the customer so that we have more money in the bank. All right, so what is meaning of debit, and what do you think about cash and bank? These are assets of the business. Assets being positive on the debit side. If we debit cash, that means we have more cash. If we debit bank, that means we have more money in the bank. Why we debit? Why we have more? Because this is sales, we have money received from the customer. So this is the idea of cash sales. Okay, but however, sometimes we don't receive money. We receive money later, so we call that credit sales. Okay, and now here is the double entry. Okay, sales always a credit item because always good thing to the owner. So I fix sales on the credit side. Now be careful about the credit here. The credit here is a verb, the action. But the credit here is adjective describing the sales with no money received but received money later. So who owe us money, which is customer, and then we call customers debtor. Remember that in previous chapter? Okay, we have this term debtor. Okay, debtor is a kind of assets. So after sales, if debtor pay us no money, debtor will owe us more money. Okay, so this is a double entry, and then I have to write down. So what is the meaning of credit sales? It means money, so no money received yet, but we are going to receive money later. So who owe us money? That is debtor. So here we have two terms. This is very, very important. You must memorize this. So for sales, we have two kinds of sales. One is cash sales, means money received. Another one is credit sales, means no money received yet, but we are going to receive money later. Okay, next, what happened after selling goods to customers? What about they are not happy about the things purchased? Then we allow returns inwards. So since return inwards being opposite to sales, and sales is a credit item, so that return inwards must be a debit item. So here I debit returns inwards. Okay, what do you think this time? This time for return inwards, we need to refund money back to the customer. We need to pay money back to the customer. If we pay, we have less cash. So cash is a kind of asset. So assets going down, assets being negative, which is credit side. That means we pay cash to the customer after returns inwards, or we pay check. Check means we have money in the bank, but however, since we pay, we have less money in the bank. But what about if we do not receive money before? Therefore, we are not going to pay money. However, who owe us less money? So debtor will owe us less money. So the opposite to debtor, which is the credit side. So here, debtor means debtor owe us less money. Okay, so this is less money, so this is assets going down. Okay, so this is a double entry for recording returns inwards. Okay, next we come to purchases. Purchases means we buy goods, we buy inventory from the supplier, and also there are two situations for purchases. One is cash purchases. It means that we pay money right away after buying goods from the supplier. Okay, so what do you think about purchases? Purchases is a debit item, so that here are debit purchases. Okay, since we pay money already, we can pay cash. If we pay cash, we have less cash, so credit cash means cash going down, right? Okay, and then we can pay check. Pay check means money in the bank, right? So this is how we use double entry bookkeeping to record cash purchases. Okay, what about this one? Credit purchases means we pay no money yet, so that anyway, purchases is a debit item, so I debit purchases here. Okay, since we pay no money yet, this time we owe money to creditor, so I credit creditor here. So what is meaning of creditor? And creditor is a kind of liability. Okay, so and liability being positive on the credit side, so that we owe more money to the creditor, so that liability going up. So this is a double entry for purchases. Okay, so what is opposite to purchases? So here we have returns outwards. That means after buying things, after buying goods from supplier, this time we are not happy, we're not satisfied, so we have returns outwards. So here the double entry for return outwards. Okay, so return outwards is opposite to purchases, and this is debit, this is credit, so that I credit returns outwards. Okay, so if it is return outwards, therefore we should receive money, we should get refund from the supplier, so that to get refund, to receive money, so more money, more cash, or we can have more money in the bank. So what about if we don't pay before? If we don't pay before, that we make settlement with creditor, so we owe creditor less liability, so that we debit creditor. That means liability going down. Okay, so that's all the transactions and the double entries related to inventory. Okay, so thank you for watching my video. I'll see you next time. Bye bye.